Well, that's really good. Well, because, today is just like any other day. It's time to do our job. And our job is to analyze the foreign exchange market, looking for reasonable opportunities to make a profit with as little risk as possible. So let's go through the analysis, huh? My name is Wayne McDonald. I'm the Chief FX Strategist for TradersWay.com, where you trade Forex, energies, metals, indices, binary options, as you know, since you are a client, and thank you for that. Today is Thursday, March 26th, 2015. Currently, I'm looking around the world here, and I see British pound strong, euro weak, Swissy moderate, yen was weak, was strong, now moderate. Dollar was very weak, now moderate. Aussie rally, CAD rally, Kiwi rally. So commodities across the board. Looks like we're going to have a fun day. Remember, trading and investing with leverage is risky and not appropriate for everyone. Your past performance, good or bad, does not predict future results. So always stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right, so let's start with where should we go? Let's do dollar pairs first. Two foreign exchange traders around the outside, around the outside. All right, so here we go. Let's start with Piggy. Piggy, 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 can't you see? Sometimes your pips just hypnotize me. Taking a look here, how would you describe the market conditions? Seems very sideways to me. We're closer to a top than a bottom. I'd like to be more of a bear than a bull. Let me just refresh this, make sure those pivots are accurate. Zoom in a little bit now. And, not a huge opportunity to make money. But like I said, we're closer to resistance. Hourly is just starting to trade swing down. So what you might want to do is consider looking for a fib this way and trying to fib it down. So you do it this way. If you were a bear. So basically, lower low, lower high, lower low. General target would be in here. Of course, if you get lucky, you bust out of the range and you move into the trend, which is down here a bit. Yep. Trading the 4 hour or if you're trading the 4 hour and you're bullish, then you're kind of looking at it this way, and you're going to buy it not just off the week central, but off the 5 EMA. And your aim is kind of like up this way. So it comes down to if you're bullish or bearish on this one. It's very important that you know both sides of the game so you can at least spot risk to your trades, right? So again, what's going on here? The news to use is that 5 EMA. Okay, that's what a bull is doing. And the bear wants this. That's why you pick a team. Both of those are completely valid. That's why you pick a team. It's also why you don't want to get caught in the middle. So if you're a bull, you would just have to buy the weekly central pivot point or the touch of 49.0000, right? That's that. Right? Why confuse it, right? Let's take a look at euro. Still moving up. I'm going to mark this up here and remind myself this could be important. Let's change the color. Where's silver? Silver. I've forgotten where silver is. Well, let's go old school and type it in. Okay. That wick, that wick, that wick, that wick. What do you think? Possibly important, right? Okay. What does the oscillator tell you? We're sort of in nomad's land. Be interesting if it diverges here. Currently, the 21 is above the 55 technically. On the 4 hour, the market is very bullish. Well, why would I say very bullish? Well, not only is the 21 above the 55, but price is staying above the 21. So technically, the market is still bullish and still aggressive. So if I was a bear, boy, oh boy, oh boy, oh boy, oh boy. How does the Forex market reverse? How did I describe that in my book? How does the Forex market reverse? Like an old man easing into a hot bath. So what we're going to need is a bear is going to want a test of the 21, lower high, break of the 21, test of the 55, and then a failed attempt to top again, failure, and rolling over of the moving averages. Because the 55 will do this, right? And then let's change the color here. And the 21 will do this. Oops, well, okay. That's how it will roll over. Now, that's a 4-hour chart. How long will that take? What is that, Monday? Yeah. Isn't that nice? We're already thinking about Monday or Tuesday in the future. Okay? You got it? Nice. Okay, let's go to a smaller time frame and see how we want to play this. Well, currently, we're at old resistance, which could now potentially be support, and the 15 minutes wants to cycle up. It takes about 2 hours to fulfill that cycle. How about this? Can you sell it here? No. Well, of course you can, but is that a good idea? No. Okay, I think we can agree that that seems like it could be support. You think the psychological level of 110 is important to this? Yeah, it might be. So if you can't sell at support, you have a choice. Do nothing. Or for a bare minimum, look for a short-term up. What? What does a short-term up look like? 5-8 cross on a 5-minute? You stink. What other patterns do you like to look for at support? What's your favorite reversal pattern? One, two, three. My favorite, if you're going to do a 1, 2, 3, I like to see the double bottom first, and then the high, and then the low, and then we go long. So your entry would be about here. And it's all it is usually it's just one extra 5-minute cycle. You like the bullish engulfing? Suppose it's very similar to a 1, 2, 3. So you're waiting for like a candle like this. And so what it does is come down, hit the 55 or 21.55 cluster, probably comes down and then breaks. So you're probably trading the bullish engulfing candle with a retracement, which is not dissimilar from the 1, 2, 3 that Adam likes. That's one of the things I like about trading. We all, we use different indicators and styles and time frames and reasons for this and that. Very often it's the same thing. Right? Now the hourly's been trying to come down, hasn't it? So eventually you would think that this is ready to make a bigger move to the downside. And that's what this oscillator is telling me. So let's put it together. Go back to the 15. How about up for 2 hours, down for 12 hours? So the oscillator will do something like this. Do you understand why? Type in a question mark if you want me to flesh that out further. If not, I'll just move on.com. Okay. Well, we're looking at the same thing from a different time frame. So the time, right? Charts are made up of time down here, right? And the time, no matter from what point of view you look at, it's the same. And the other thing that we're looking at is price. So we're just measuring time and price, right? That's always the same. So in every chart, all known information is available and is priced in real time. So, Euro USD right now is always going to be worth what it's worth right this second. Okay, but the patterns change depending on the observable. What we're doing is changing the observable by changing periodicity. So all this information that we're looking at is correct. There's no opinion. This is what has happened. What the oscillator on this time frame is telling us is that it's more than likely overbought and has a high propensity to fall for for a full cycle like it did here, like it did here, like it did here, like it did here, okay, like it did here. It's overbought, drops, overbought, drop, overbought, drop, overbought, drop, fine. Okay, so that's where we are. So that is more than likely going to happen. Now the question is, how many candles does it take, to drop at a full cycle? And it could be a while, right? Perhaps a full trading day or a full session, London open to London close, something like that. So that is probably going to happen or has a high likelihood of fulfilling itself. And so is this on the 15-minute periodicity? It's the same price and time. But in this case, on this time frame, we've changed the observable now. Price is the same, time is the same. But from this point of view, it's not overbought, it's oversold. And it's going to likely, just like it has in the past, cycle up from oversold to overbought. And then what? It gets overbought and then falls, oversold. So it's going to make its cycles. Now what we're trying to do now is line up the hourly cycle with the 15-minute cycle. Okay? So how about this? Let's say price does rise now, and then price on the 15-minute chart does become overbought and starts to fall. Well, what's interesting is on the 15-minute chart, if that were to happen, it's going to want to fall from overbought back to oversold. But the hourly is already set up for that. So basically the hourly chart is just sitting around waiting for the 15-minute to get its act together. What I call it is congruency. Okay? The 15-minute wants to rise, the hourly wants to fall. So the 15-minute will likely try to rise, but it's going to struggle. It's not going to make a higher high according to the hourly chart. The hourly stochastic oscillator is not going to allow it. It's sort of like a headwind. When you're trying to sail, you can't sail into the wind, you're going to have to tack, right? So it's difficult. Or how about this? It's like swimming upstream. It's very, very difficult to swim upstream in a moving river, right? In a swift current, or in the native Cree language, we call that Saskatchewan. When you're swimming upstream in a swift moving current, it's very difficult. But what happens if you turn around and you want to swim downstream with the current? What happens then? You move faster and with expending less energy, correct? In fact, you could float down the river of Forex, doing almost nothing at all, just letting it carry you. And that's how I look at it when you have multiple time frames that are congruent. Let's say if 3 time frames all say down, it's going to be pretty easy to sell and then let it run, versus having fragmented time frames. Sometimes, 15 says up, hourly says down, daily says up, but 4 hours down, and you're battling, right? So the way I'm looking at it here is it'd be interesting if it bounced at the psych level, creating an oversold to overbought scenario, and then we turn down again, which is now really a double top, in a zone that we've identified as a sell zone going back several days. So now the 15-minute wants to drop, the hourly wants to drop, and it would be much more like swimming down. So this would be sort of like up until the New York Open, to the London close. Okay? So that's how Jen, that's how you do it, is if it heads up, Jen, this oscillator is going to on the 15-minute chart, right? And then when the oscillator turns down on the 15-minute chart, now you're congruent because we already know the hourly is ready. Okay? It's already. So what we need now is basically retracement, drop. That's it. So how do you catch it? You look for this on the hourly chart and you say, okay, this looks good, looks like it wants to fall. However, I'm at support. Is it a good idea to sell at support? No. Where do you want to sell? Resistance. Okay? Drop into a smaller time frame. And you say, okay, well, can't sell here, it's support. Oh, but look, the oscillator wanted to rise. So the support is probably going to hold for now. So it'll go up for somewhere between 1 and 3 hours, which would probably create something like a lower high or a double top, depending on the scenario. Maybe there's a pivot, maybe there's a psych, maybe there's something, who knows. And then once this shows weakness, now you have confidence because the hourly wants to fall, the 15 wants to fall. Drop it like it's hot. Okay, Jenny? That's why you need to use more than one time frame in your trade planning. Consider one strategy. Anytime you use a medium or long-term chart, let's just say that is, you look at this and you say, okay, my strategy today is to, or not even today, this session or something. You say, I want to sell the hourly chart. Okay, that's a strategy. So now the tactics of the trade is much more specific. The tactics say, wait for a pullback and then sell. That's the tactic. So you're going to enter the trade on the 15-minute chart, or even let this get, at least 50% overbought, or in here, or at a fib level at least, and then drop into a 5-minute. Right? And do sort of the same thing. Wait for price to be up here on a 15-minute chart, and then wait for a 5-minute cycle to fall, because now that would create a 5-minute overbought scenario with the 5-minute stochastic at resistance, and with the 15-minute overbought with the hourly overbought. Okay? Think about it, that can happen, right? So the hourly is already overbought. So you wait for the 15-minute to kind of get there, not quite there, but close. Now you drop into the 5-minute chart and you catch that one, which will turn this one, which will catch up to this one, and off we go. Now you got 3 time frames, and it's like a cascade. Okay? You can't swim up a waterfall, so don't even try it. Don't go chasing waterfalls. Please stick to the lakes and the rivers you used to. Yeah, I know, that just happened. All right, check this out, yo. I'd like to see this fall. Next. Cool, Wyatt. Yeah, I've tried stuff like that in the past. Cool. I hope it works. All right, so you see the lower low? That's what catches my eye right away. Okay. Then you catch this, it's overbought, should fall soon. We don't really know. I mean, it could keep going up, but it should fall soon. And then you say, well, is there any resistance? 79. Weekly pivot, monthly pivot. So let's just call this whole area sell zone. Yeah, makes sense to me. Okay. So tactically, what do you want to do? Boop. Uh, uh, right? Have this do sort of a 50% and then wimp out. So the way I like to do that, doop, doop. Oops. You go object properties and you put 50. That's 50%. Boom. That just happened. Now you got a 75% line, 25% line, and a 50. So I'm thinking this could happen here. For example, why would it go 90% overbought if the hourly chart wants to fall? If the hourly chart is successful in its endeavor to bring price down, then why would the 15-minute chart go way overbought? Shouldn't happen. So how about just a therefore it never gets overbought and then just whips out. What do you stink? Smell like a plan? Cool. Hey, are you going to do it? Hey. Nope. Arigato. All right. Well, I wouldn't want to sell that here. Now, we already had this planned out for quite some time, right? We have it on another chart. We have this zoned out on the long-term trend, remember? And we have the red bottom, red top. So all we predicted was it was likely to come down to the bottom. So now we're at the bottom. Can't sell here, so you look to buy. And is it going to reverse quickly or slowly? It's probably slowly, so it's probably going to go down. And then it's going to go up to the 5. Then it's going to come down. Then up to the 21. And then what? Down. And then 1, 2, 3. And there we go, right? So that's on a daily. My gosh, can you imagine the amount we're going to have on a 15-minute chart or an hourly chart? And this is the type of scenario that an amateur gets just slaughtered, right? Because they're chasing price all over the place. So instead of selling the 618 to the 5 EMA, you know, they'll sell down here and then it'll make a higher high. So then they'll start buying high, but it's going to hit the daily one and drop like a ton of bricks. So they're going to just lose. Then it's going to get to the bottom. And then, I mean, by then, who knows? Every bad mistake's happened already. So that's the next 2.5 weeks of trading the USD CAD. Next, let's go yen yen. I think we did cable. Didn't we do cable? Did I skip it? I apologize if I did. All right. Are we at support or are we at resistance? So when we started the week here, this was Monday morning, Asia Open, the projected target for the week would have been right here. That's what this green zone is, predicted top. Like this is the predicted top, predicted top, predicted top, so on and so forth. Okay. Predicted bottom, predicted bottom. So we've hit the like, fine. Could go a little lower just because it's such a big move. Okay, I wouldn't expect anything more than S1. But if you're going to play the pivots now, it's one of these things where if you hit it earlier in the week, you get back to the weekly central point. Weekly central point. I don't know if we can call it early though, right? I mean, it's the middle of the week. So like here where we hit the pivot profit zone on a Tuesday, standard operating procedure for that is to trade it back to the central pivot point. We almost got there. But, you know, I don't know, is Wednesday night or a Thursday morning, is that early in the week? I don't know, right? So, I don't know. I don't know. Just don't know. I don't know. Maybe. Trend is down, so why don't we use the moving averages then? Okay, it would go up to the 55, down for a double bottom, up to the 21, down to the roll reversal, up to the 55, fib of that big move, and then up to the central. Friday close. That's a lot of guessing. So what goes into the guessing? That we don't go below the normal pivot profit zone. You have a point theory, and then if it is going to try to retrace, at least retrace, you know, because a high up here and a low down here, and then a move back to the central pivot point, that's just a Fibonacci retracement, right? That's no big deal. You know, that then fine. If that's going to happen, then how do the moving averages and support and resistance come into play, right? Well, up to the 5, which is also here, tons of resistance, down, right? And then up to the 21, which should hold, down to, but we made a higher high, so the higher low, that's a 1, 2, 3, 1, 2, 3, right? Up where the future 55 is going to be, which is this. And then you got to take the big fib now. So maybe here, back to the roll reversal one more time, maybe even a little bit lower, and then where? Central, maybe? That part's the real tough guess. But that could happen if we break the 21, break the 55, you know, we'll already be above the 200. So, you know, in the pivot point theory, like I said, if you're going to play a textbook, is back to the central. So you just try to throw all that into the mix, well, put it into the bubbling brew in front of us, and yeah, that's what the witch's brew says, right? But that's a lot of guessing. But the nice thing is, if you can paint the picture with your mind's eye, if that happens, if you're right in some of that guesswork, at least you'll recognize it because you've already thought about it. How could you possibly trade with consistency if you can't think ahead and if you can't plan ahead. Probably, most definitely impossible. Let's do our yin yen. Yin yin. Okay. Check the time frames quick. Hour, 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 hour. Okay. Why do I use setups like this? Let's talk basics here. Ground strokes. See, I could look at this and say CAD stronger than pound. CAD stronger than Aussie. Right. And then I could do like sell USD if I wanted to be a buyer of Canadian dollar. Right. And you can see, sure enough, up to the 21, beautiful sell opportunity, right? If you'd sold up here like you're supposed to, easy peasy lemon squeezy. And yet I can see that on a yen chart. So it's relative strength. Thank you, YJ. No, okay, it's not just yen picture, it's relative strength. So if the yen is neutral here, then I can look at euro, CAD, Aussie, and pound and see which one's moving up the fastest, aka the strongest currency, and which one is moving up, let's say moving up the least, which would be weakest relative to the yen. So if I see congruency, let's say yen generally stronger, generally weak, then I can get the opposite of that and see besides yen which one's strongest, or let's say relative to yen which currency pairs is strongest, because then it'll tell me the strength relative to each other. So I could look at this and in about in 2 seconds. Let's be realistic. In 2 seconds, I can look at this and I have a yen index. No, I'm not saying it is neutral, Wyatt, but if it is, you can neutral it out. So let's say you looked at this, and that's why I want to see the time frame. You got to make sure you're observing from the same time frame, right? What if this one was moving up and this one was moving down and this was sort of like a kind of up and this one was flat? What does that tell me? Tells me I have no idea what's going on with the Japanese yen. So move on to something else. But what if, generally speaking, these were all down? What does it tell me? Okay. What else does it tell me? No, yen strong, Jenny. Japanese yen strong. Yep. What else does it tell me? There's a lot more to it than that, Mike, but generally speaking, that wouldn't be a bad idea, obviously. What else does it tell me, folks? Adam says risk. Well, that's not always the case. Just in recent history, that's been the case. Look, if they're all down, which one is down the most? And which one is down the least? The one down the most, let's say it's British pound, therefore it also tells us British pound is weak. So now we know yen is strong and pound is weak. But what if, CAD looked like it was down, but trying to head up? Well, then it also tells us CAD is strong. In fact, if CAD is moving up, CAD is actually stronger than the yen. So you could sell pound yen, but you could sell pound CAD and make even more. Are you doing this with your analysis, guys? Because I burned through this in like less than 2 seconds, and I go boom, 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 and then I move on to the currency pair I want to trade. You gotta put your finger to the wind, right? Your ear to the ground, your finger to the wind. Okay, Jenny doesn't understand the correlation, so let's try to explain it. Let's try to explain it again. If all these are falling, in this particular case, I like the yen because the yen is always on the right side. Always on the right side, okay? So if they're all generally falling on the same time frame, then the yen is stronger than these currency pairs, or than the other currencies on the pair. Euro on this one, CAD on this one, Aussie on this one, pound on that one. Okay? Do you understand that concept? If I open up this chart, the first thing I want to look for is direction. If they're all down, yen is strong. If they're all up, yen is weak. Cool. Now you have to use another filter here. Relative to that general direction, which one is falling the fastest? And that would indicate the currency on the left of the yen is now the weakest, because yen is strong and pulling it down farther and faster than the other currency pairs that we're comparing them to. So pound is weak. Okay? And now we can use that information as well, because then we can find out relative to the Japanese yen, which one is the yen not beating as easily. Okay, so let's say the yen is the strongest pair on the planet, or the strongest currency on the planet at the moment. Then that's cool, but there's always going to be a competitor. A competitor. Maybe it's dollar. What if dollar's moving sideways, but dollar yen is moving sideways and everything else is falling? Well, then it tells me two things. One, I want to buy yen, but the dollar is also just as strong as the Japanese yen. And I might want to start looking to not just buy yen, which means sell yen pairs, but I might want to buy dollar, because yen is not stronger than the US dollar. It's neutral. Okay, so that's called relative strength. So for example, let's change a variable here. Yen is stronger than the CAD. Yen stronger than the euro. Yen is much stronger than the pound. And what if Aussie was sideways? What does it tell us? 3 things. One, Japanese yen is strong, So I put that down on my things to do. Buy yen, JPY, right? Buy some yen. 2, British pound is weak, right? Great. Why? Because the yen, which is strong, is pulling down the British pound farther and faster relative to the other currency pairs that we're observing. So yen must be, or pound must be much weaker than the Japanese yen. But by that we can also see that it's probably or weaker than the CAD and weaker than the euro as well. Okay. And then this sideways is telling us, well, the yen is stronger than the pound, the yen is stronger than the CAD, the yen is stronger than the euro, but it's not necessarily stronger than the Aussie. It's moving sideways. Therefore, the Aussie must also be just as strong as yen. So you put that down here in your buying basket. And so now Aussie must also be stronger than pound. Aussie must also be stronger than CAD. And Aussie must also be stronger than Japanese yen. But I would be best off trading pound first because it's still the weakest. Okay? And it's helpful to have that in 2 seconds worth of analysis. Because now you're lining up the strongest currency pair right now, or sorry, the strongest currency right now relative to a basket of other currencies, right, with one that's weak. You're always trying to pair up the strong versus the weak, whether it's fundamentals or technicals. Okay, so very often when I say, at the beginning of the day, when I say, okay, well, British pound is weak, euro is strong, is neutral, what am I saying? I'm giving you relative strength. Yen is neutral to what? All other currencies that we use. Okay, so that's why I throw that out every morning. Dollar was super weak, but is trying to recover. What does that mean? Dollar versus what? Versus everything. How often do you look at it this way? About every 10 minutes. $18 hours a day. See, very often, have you ever heard me say this where someone's like, hey, Wayne, can you look at the pound yen? And I say, well, why would you trade the pound yen? They're both weak. Right? You hear me say that, right? Where you're like, that Wayne, he's such an arrogant prick. No. Well, I'm looking at it like, well, they're both weak. Why are you lining up 2 weak currencies? Aren't you supposed to like pair up a strong currency with a weak currency? You're like, but it's my favorite currency pair. I always trade pound yen. Well, that's boring. Why do you only use yen basket? I'm not following you there. I don't only do anything. I'm not USD and USD. No. I do both though. Look. I got scan yen, scan dollar, scan pound, scan euro, scan Swissy. I don't have it on this one, but like 2 years ago, I just, all I really traded was either the British pound or the Aussie. Mostly Aussie, just sell Aussie everywhere. So you can go through here and how's the British pound doing? See, because what I could do is I could say, oh wow, British pound is really weak versus the yen, and then I could open up this line and see what's going on British pound wise. Okay, always make sure you're on the same time frame. So let's put these all on 4-hour charts. Just got to make sure you have same observable. Okay. And what if you saw on this time frame or on this pair, guys, on this scan, what if you saw every oscillator or bot wanting to fall? Might be an opportunity to sell British pound, right? How about this? They're all the same time frame. Pound Aussie, extremely overbought, wanting to fall. Pound Swissy at the 50% line. Well, this one's at the 75% line. Pound yen is at 25. Does this look like it's congruent? This one's at 5% overbought, 5% overbought, 50% overbought. Look like an easy trade? Like a no-brainer? Does this look like the fish are going to jump into the canoe? I wouldn't trade any of them, Mike. There's got to be something better than that. It doesn't tell me anything about the British pound. So when I started this session, I probably said British pound has been fairly strong, but is now neutral. Well, neutral, right? It's just all over the place. It's not overbought. It's not oversold. It's flat. It's okay. It's Thursday, so I think we got weekly jobless claims. Do you want to catch the news and call it a day?
Jobs or more, according to UK press. Romeo and the Oscar.
Hey, did we say that this pair was going to go up for a double top lower high scenario? That's funny, huh? After all those red candles, we just casually said it was going to go up and then drop on the hourly. How funny is that, right? Only the names have changed. I think it'll probably top out, but so weekly jobless claims, we have a nice little trend, but you know, who knows? Maybe if we step off trend a little bit, create some short-term volatility. What, 2.5 minutes? Okay. Ooh, we're through that big trend line, but it's not accurate anyway, so let's just kill it. Look at all the resistance we're coming up to, folks. Where the faces are so cold, travel all night just to get back home. How's the coffee this morning? Still more Fed spam. Lockhart has already said that the U.S. economy is solidly on track, but Q1 data has been soft. Impact transitory, aka weather. We know all of that. Lots of Fed speak this week, though.
One minute to the data. Weekly initial jobless claims expected 290,000. Prior was 291,000. Continuing claims expected 2.40 million.
Less than a minute now. Barclay just revised.
Initial jobless claims in just a few seconds.
Barclays revised their call for euro to hit parity. Q3 now versus Q4 earlier. So Barclays wants to sell as well.
282,000 below the 290,000 expected. Continuing claims 2.42 million above the 2.40 million expected. Prior advised slightly higher to 2.42 million.
All right, that's good. 282. Yeah, that's good. The trend is what's important, right?
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network.
All right, wrong one. Trend. Hang on. What's the trend? The 4-week average. For some reason, it's not there. 4-week average. Yeah, I can't tell. It was 304,000, almost 305,000 last week. Oh, 282. Oh, there we go. The new 4-week average is 297. So the 4-week average is now below 300,000. So the trend is good. You guys want to read the? So the same. Let me get this for you. Oh, the names will change. You guys are interested, right? You actually want to know how to do your own analysis, right? That's not what I want. Hang on, hang on. All right. How does this look to you? All right. Let me post this in here. So you can review it if you want. So from the U.S. Department of Labor, as of 90, well, about 100 seconds ago, released this. Seasonally adjusted initial claims. We were up here, then we were here, now we're down here. Very nice. Trend is down, right? So the new trend is below 300K. So we've gone from 350,000 down to a 4-week average of 297. So I would say, in my humble opinion, that's a reasonable improvement. Okay? And now we're looking at this to judge the economy and the effectiveness of the central banking policy of the United States. What is the primary functions of the Federal Reserve Bank of America? Full employment, price stability. So we're looking at one of the dual mandates of the Fed, and the less and less people are filing for unemployment. Cool. So you can get pretty specific with your microeconomics. 4-week moving average, like I just said, 297. Don't you love it that I blurt that out for you? Fred, it's funny, and I'm going to pick on you on this one, Fred. People almost always say that, and it's wrong. The Fed does not print money. Who prints money? Drives me nuts. We all have to have pet peeves, right? The Treasury. Yeah, not the Fed. The Fed doesn't print money. So anyways, I can get into that. That's a whole nother lecture. But anyways, 4-week moving average. We've gone from the 4-week moving average being 305,000, like I just said, to the new one, which is 297, which I just said, right? So pretty nice. Okay, it's a little choppy here, but last year at this time it was 320. Now it's 297. Now you look at it, it looks pretty good, or at least looks better, right? So on and so forth. So you can get pretty nitpicky with your details if you want. You can break it out where the jobs are coming from. Here's the state, right? Louisiana, how's Louisiana doing, right? You can get right into it. All programs excluding railroad retirement. It's amazing how some of the government are just so old, but they still do it, right? But anyways. So there's the stat. You can read through this. They give you, they give you some pretty nice information. The highest unemployment, March 7th, Alaska, New Jersey, Connecticut, Rhode Island, blah, 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 blah. Pretty nice, right? And by the way, you'll read almost all of this stuff. You'll read it in the Wall Street Journal tomorrow, and you're like, wow, they really did research and due diligence for us. Yeah, they just reprinted the press release. Nice, huh? But anyways, you need to know, huh? You need to know. You're a currency trader, you're a professional, right? You should know this stuff. You should have access to the data. You should plot it. You should at least have it on your mind. You should have a general idea. If somebody said, so, why are you buying the US dollar? You can say, well, one of the things I like to look at is in regards to the effectiveness of the central bank policy at the Fed is part of their dual mandate of full employment. So I like to look at the trend in the weekly unemployment claims. In particular, it helps me understand non-farm payrolls, which is another high-end measurement of the full employment mandate. So I like to look at the change in weekly unemployment claims and the trend in unemployment claims, right? And that gives me confidence from the data that I see of U.S. dollar strength, even though it's been weak for the last 2 weeks, I'm still confident that it will be strong for quite some time. In fact, my research has told me that Barclays' lead Forex analyst has a very similar view and sees parity within the next 6 months. He thought it would be 9 months. Now he says 6 months. So he's sticking to the trend, and I'm looking at the same data, and I'm sticking to the trend too. Me and Barclays, we're one and the same. And again, you're like, Wayne, well, how do you know that about Barclays? Well, he said it 12 minutes ago. It's nice to be on the clue train, right? In fact, Barclays says euro to test 95 in the first quarter of next year, 2016. Parity and below. But of course, a year ago, I said 80. So, hey, gotta go. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for being a client of Traders Way. If you're watching this video recording that I place on YouTube, please pay it back. Please give it a thumbs up. Please leave a comment. You know, I've dedicated more than some time this morning to prepare for our event. Then the event's been longer than an hour. I'm going to spend the next half an hour uploading this to YouTube for you guys. So that's at least 2 hours of my life for free. If you could spend, 5 seconds to pay it back and just give me a thumbs up or leave a comment so I know you care, that'd be greatly appreciated. And I'll see you tomorrow at fxstreet.com for my weekly event there. So the world needs to hear it. Peace on earth. And to you, may the pips be with you. May your profits be above average. Take care, you hear?